Hello, how's it going, everybody? Welcome back to the crypto portion of MCubed. I know I've been gone for a while, but there's been a lot of stuff happening in the crypto space while I've been gone. So a lot to cover. I know that I think last time we were at the start of the recovery of Bitcoin, Ethereum, and the rest of the crypto space, and all that sort of already happened. And then we saw some more retracement in all of the areas of crypto, but a lot of news dropped. A lot of news, a lot of fundamentals happened, and it's looking really interesting on the chart as well. So I'm excited to dive into it. Hope y'all miss me, because, you know, I'm back, man. All right, let's see. Let's jump right into it. Boom. You know, classic thing is pulling up good old CoinGecko, and we can see even on the 7-day summary, you know, we saw a nice big drop here, and this was pretty much Black Friday. You know, Black Friday really gave us Black Friday prices for crypto. So if you guys got in on the dip during Thanksgiving week's Black Friday, I definitely applaud you guys. You know, you guys are more mentally tough than the majority of people out there that are in any sort of market whenever it comes to investing or trading, right? The masses usually, you know, don't want to touch anything whenever it's down. Either that or, you know, they wait too long for a deeper retracement. You know, people were probably thinking, oh man, let me get in whenever it goes to 30K. Let me tell you guys, 30K is never going to happen again. All right, I firmly believe that 30K is off the books. It's established its levels around there, and that could be the last time we see it. I think maybe the minimum we're going to see Bitcoin at is going to be like 50K, right? Ethereum has been doing a very nice and healthy move back up, and I'm gonna go more in depth with it, you know, on the trading view chart, which, by the way, I don't know how long this has been out, but TradingView has a whole desktop app now, which is awesome. Game changer, more powerful of a tool for me to use, and way less annoying than, you know, having to refresh a tab or accidentally closing that tab. So I'm super happy about it. For a guy who looks at charts super often, you know, I love to see it. Solana is in the top 5 coins now, folks. That's crazy. I did not get a chance to get early in on this. You know, earlier this year, this coin was probably around like 40 bucks. And now we're sitting at a pretty 200. You know, I haven't really seen it gone down past 200 after it's really broken that level. So really big things happening for that project. You know, the NFT space is starting to really boom within the Solana blockchain. Just lightning fast transactions. Everybody that I know is in Solana has been raving to me about how awesome Solana is, right? Cardano sitting at the pretty sick spot, and then there's Binance and Tether. I'm not really going to get into those. Tether's kind of sketchy. Honestly, if you're looking for a stable coin, I would just look into another stable coin. The only reason why this is up here is because it's the most commonly used stable coin. It's the most accessible one, but they do, the people that are in charge of this project do some pretty shady stuff. So don't really suggest it. Binance is, if you want to do it, I mean, I'm not going to stop you. I physically can't stop you from investing in a Binance, but I just personally stray away from it, right? I'm waiting for my ability to leverage trade this coin, to be honest, on MetaTrader 4. Let's see. We have Doge sitting in the top 10 coins for no reason whatsoever, and we have Polkadot in the top 10. Let's go. USD Coin's a stable coin project that I would highly suggest in place of Tether. You know, it's more regulated. It's regulated by Coinbase. Not terms of regulation, but, you know, Coinbase is more government regulated, and Coinbase is the exchange that created USD Coin. So in layman's terms, it's more regulated than Tether. They have better outcomes whenever it comes to terms of, you know, them getting audited. They've been audited before, and, you know, they had what they said they had, versus Tether, which, you know, paid out of court settlement fees to get by with not having what they said they had, because they were turning around and investing the money that, you know, was supposed to just sit there to back their currency, right? So very huge red flag. You can only pay out of court settlements so many times, guys. So in my eyes, this is a ticking time bomb, and this could be, you know, another black swan event. You know, the day that Tether like goes down, and, you know, everybody that is holding Tether, like, their money's gone like that. People are going to lose hundreds of thousands of dollars overnight and think that crypto is a scam, and then that might be the trigger for this bear market. Who knows, you know? But what I've come to learn is the news is simply just an excuse for price action on a chart. The chart always never fails to hit the levels that it needs to hit before it makes its movements. So for anybody who is legitimately serious about investing and trading long term, you got to learn how to look at a chart. You can't just look at news. Whenever it's on the news, it's just simply too late, right? One last one that I'm going to cover before we really dive into the charts is Crypto.com coin. I don't know about you, but Crypto.com coin paid a lot of people recently, especially with the recent news of Crypto.com coin buying out the Staples Center that the Lakers play at, right? Huge. You know, like, when was the last time you guys went to Staples? I'll wait. I can't even remember the last time I went to Staples, right? And I get whiteboards all the time. I have a huge whiteboard that's plastered on my wall that I got from Uline. I don't go to Staples, right? With that being said, you know, you've seen their names, if you've been out in the world, a lot more often recently. I literally went to the movie theater, and as I'm walking in, like, I'm seeing Matt Damon on the big screen on a commercial for Crypto.com, and like, it just baffles me. You know, seeing all my family as I'm walking into the movie theater, and I'm just looking at them like, I told y'all crypto's gonna come up. You know, Fox News Network, whenever they're covering their sports segments, instead of, you know, something like the Coca-Cola highlights, it's the Crypto.com highlights. And, you know, their logos plastered all over the table during their discussion table topics, you know. It's crazy. Really crazy. They've jumped incredibly in price. You know, whenever I saw them go to 50 cents, I was already freaking out. And then it touched 90 cents later that week. So yeah, I mean, that's pretty much it for CoinGecko for now. But let's go ahead and jump into, you know, a little bit of the charts. I forgot where I was at in terms of where I was last episode. So I remember explaining that level. This is a naked chart. You know, this is my usual charts, but there's just too much going on there for me to dissect everything for you guys within a reasonable amount of time. But what we can do is we go from lowest closing candle, low to high, bring out those levels. Gonna make these a little bit thicker for y'all so you guys can see that. Bring that down, right? And what do we see? We saw a nice test of the 50% 618 zone. It did not stick around there for long, folks. A lot of people were calling this, you know, the Bitcoin crash. It's going to the crust now, guys. And I don't know about y'all, but this chart looks bullish. You know, don't let these people freak you out of your bag. Like, just because it goes down, what, like 20%? Come on, guys, it's crypto. It's crypto. Like, you've seen, you know, 100% in a month, and then you guys are worried about 22% in 18 days. Really? Right? You know, it's really just the levels. Because I mean, if it was really a crash, it would be something more concentrated like this, where it goes down 50% in 7 days. Like, I would have looked for an exit around these levels whenever I saw signs of it just rapidly breaking these lows so quickly, right? This would probably have been the level that I exited out at, right here. Boom, right there. Because at that point, this low is taken out, this low is taken out, and this low is taken out. This low is taken out in a very short amount of time. All right, and soon after, this one was as well. All right, so exits would have been around 51K or 45K, but if you're really on top of everything, 51K would have probably been the best thing. Or if you were like really on top of everything, then 60K around that level would have been solid, because you would have seen this last higher low would have broken, and that is just an official break of structure. This is the first indicator that, like, hey, it needs to do something like break this high in order to start being bullish again, right? Because this is on the 4-hour time frame, and what I mean by that is that each of these candlesticks are 4 hours in time. So there's a lot of days on my screen right now, right? I'm going just based off of what's on my screen right now. This is from the 17th of February all the way to the 4th of June, right? And I usually zoom out like this. So you can only imagine that this was a very strong support zone that just got shot past, right? So that would have been my first indicator of, you know, exit, right? Just because it broke past this level again, it only held for one candle before it just started plummeting back down. So you don't really want to base it off of support and resistance levels, guys. Really pay attention to the structure of the market, right? Structure of the market consisting of highs, lows, boom, boom, boom. This was the last higher high until it went ahead and established this low, which then invalidated this level right here. Boom, that's no longer valid. And guess what? That immediately turns into a sentiment of bearishness. And these were all, you know, higher levels, so I'm going to make this all blue. Based off of my markups, this is actually not a level that I would be looking for, right? It would have been those two levels. Once I saw that this level was broken, that is my clear sign to get the heck out of there, right? That is my red flag. And then boom, that was the last lower high lower high before the train left the station. All right, so fast forward to now. Bring these markups back up here. We have the 50% level. Boom. All right, we got this, right? This is the official, you know, low to high, right? We have this as the recent higher high over here because it broke that level. You know, we saw some new all-time highs off of that recovery, right? And people are already saying, oh, Bitcoin crash, where's it gonna go? It's the end of the bull run, guys. Yeah, it's the end of the bull run after it makes an all-time high that's higher by the previous high by 6%. When have you ever seen that, right? When have you ever seen a bull cycle end after 6.5% of price increase in a new all-time high? It just never happens. That's unheard of in crypto. That might happen in stocks, that might happen in Forex, but this is crypto, right? This is America. All right, anyway. But what we can do is go ahead and find out are levels of selling pressure, you know, on its way back up, because there's always two sides to the market, as I always say, and we can always look out for those zones that Bitcoin needs to break back up again whenever it's on its way back up to recovery. So this is a level that I would be looking out for pending selling orders, you know, large volumes, people hedging, people taking some profits, maybe pushing the price down to get a better price. And then the last line of defense for the sellers are going to be right here. Boom, right? And these are gonna be red, and that is out of our sight. So these are usually the largest amount of volume of selling orders right here. Right, this is what I call a supply zone. This is a supply zone. And that text is white too. All right. Boom. Supply zone, right? Meanwhile, something like this movement right here that we just analyzed, right? This level would have been considered the demand zone. Boom. Demand zone. All right, I hope this makes sense for you guys. I'm really just trying to bring some value to y'all for not being active for the past few weeks. You know, I haven't quit looking at crypto, still doing my thing. But yeah, I mean, these are demand zones, these are supply zones. And let me let you in on a little bit of a secret, right? Something that the people with the most amount of trading volume in the markets and the most amount of shares in any sort of markets keep to themselves, right? There's something called HFT. And what that is high frequency trading, right? It's a method of trading that uses powerful computer programs, Fibonacci, to transact a large number of orders in fractions of a second, right? This is what the banks use. What the banks do is they program levels of Fibonacci to go ahead and have their robots, because they don't have people trading for them anymore. Humans make mistakes. Robots are programmed to do one thing and one thing only, whatever they program the robots to do, right? So what they program the robots to do is, hey, as soon as it hits the 78.6 level, whenever it hits the 88.6 level, whenever it hits, you know, any part of these levels, they're going to go ahead and pump billions of dollars of volume into the market within fractions of a second, right? And they have multiple robots doing that. They fill in thousands of orders in milliseconds, and that's why you see ridiculous candles like this, but on the minute charts, on the 15-minute charts, right? And you can observe the manipulation within these things right here. Boom. If I zoom in. All right. Well, that one was probably not the best level to observe, because that was not a level of imbalance. Let's say right here. This one hasn't been revisited yet. Boom. Right, what we see is levels like this where there is only one side of the market. This tool right here shows me, and actually let me move it over to around here. Maybe it'll give me more of a insight. No. All right, what we get is levels like this where we see, you know, 21-0 sellers to buyers. That is a clear imbalance of price action. If you know anything, if you've ever been in the markets for any amount of time, you understand that there is always a buyer and a seller in the market. What happens sometimes when there is a ridiculous amount of sellers or buyers in the market is that there are not enough buyers in the market to buy at that price, or enough sellers at the market to sell at that price whenever people are buying ridiculously. And so that causes slippage in the market. There's not enough liquidity to fill those buy orders whenever there's pending limit orders, right? So it just makes ridiculous slips in price where it just drops vertically. It just drops vertically, and that's why we see these big gaps in the market, right? Because what are you taught? What are you taught in any sort of like Forex textbook? Markets are usually supposed to look like this, right? This is a healthy trending market, and then this is a healthy downtrending market. And then sometimes there's not anything happening and you just see this. Right, it's all wavy until it breaks, and then we see nice little waves up, or it consolidates, and then boom, it breaks, and nice little waves down, and it looks like the stock market except less manipulated. But what happens is the banks know that everybody's taught these, and so they disguise their manipulation into the price action. And you know, you can't hide everything. If you have the right tools to measure the market, you can spot those areas of manipulation from a mile away. So that is, you know, Bitcoin wrapped up for me. I'm not really looking for anything in particular whenever it comes to like leverage trading entries. I've already gotten in around this level. Yeah, I mean, you shouldn't be buying anymore per se. Whenever it comes to you know, holding it in your wallet, I mean, it's pretty up there. It's pretty up there. So I wouldn't say, you know, buy anything per se right now. Yeah, this was 2017. Yeah, I mean, here's where I would have stopped buying, right there. It's already pretty up there. You know, to each their own. If you find a nice entry level and you're a god at looking at some levels, do your own thing. You know, at the end of the day, this ain't financial advice. This is just my outlook on the market personally and how I see the market. Everybody should develop their own way of looking at the market. Let's look at Ethereum. Ethereum is just jumping out the gym. It's doing amazing, right? And honestly, let me see if I can pull up the Ethereum to Bitcoin pair right here. It's doing great. Boom. All right, let's take off the logarithmic. Go here, right? And prior to all this, you know, we saw Ethereum making like a super rapid run up. It was making highs like ridiculously. This just went absolutely parabolic. And it broke below it. All right, let's go ahead and broke below that. All right, it started like aligning with it a little bit more, but you know, we just saw like ridiculous amounts of increase within the Bitcoin to Ethereum pair, but it's still very bullish, right? Let's go ahead and do our little method. Boom. This was our last high, low, higher high. In that term, it would have to break this low, guys, in order to, you know, be bearish on the Ethereum to Bitcoin pair, right? Because we saw all of this was just a bunch of noise. None of this stuff is irrelevant. None of this stuff is relevant until it either breaks this level or that level. Until then, this is just the trading range. It just broke this level again, so now our new low is that one. That is our new low. Boom. It's the lowest point that it reached before it broke this high. So now this is the level that we need to look out for whatchamacallit, like potential bearishness. There we go. And this is the level. I mean, honestly, it's still in the middle of its movement. But yeah, ETH to BTC, multiplying my BTC in the meantime, because that's going to be what all the markets are determining people's worth with in the future. You know, it's what all the banks are going to be selling first. Definitely look into it. Not enough institutional investors know about or like take ETH seriously enough yet, but it will happen. People realize, you know, the use case of ETH. I mean, I know that Taproot happened recently. It finally, you know, partnered with Bitcoin. It's implemented into the network. Smart contracts are finally a thing for Bitcoin, but there's just not a lot of stuff built. Not a lot of smart contract protocols built on Bitcoin's network yet. So I would say I'd at least give it a few years, because Ethereum has a heavy head start on Bitcoin's network. So many people have adopted Ethereum already. You know, Bitcoin has some time to catch up, but I mean, it's still at an advantage because, you know, Bitcoin has been king for an extended amount of time. Everybody knows Bitcoin. You usually learn about Ethereum second, right? It was, you know, 99% of the market cap for the longest time, until finally ETH stepped into the room and just boom, it's completely like whatchamacallit, like disrupted the absolute dominance of Bitcoin, right? And we haven't really seen it break out into these high levels recently. Right, this was January 2021. It was like 73%. Now we're all the way down to 40%, guys. We're making lower highs. We pretty much demolished like all of these. All right, so we have high, low. All right, that would be the low for this high. We haven't seen it break it necessarily just yet. Boom. Broke straight past that, so it's technically in a bearish state right now. All this is interpretive, though. You could look at market structure in a completely different way that I do. But I say that a low isn't a low yet in a trending market until it makes that next higher high. It's not valid. And a lower high isn't a lower high until it makes a lower low. So keep that in mind, guys. Keep that in mind, guys. I think that'll wrap up my my part of the chart segment, because I've went pretty in depth with that. What I would say is some coins of the week that I'm really excited about that I looked into is this coin right here. I've been preaching this to my people like some dude on the corner of the street preaching the rapture, right? The render token. This one's a really nice project. Whenever you look at it, it's a metaverse rendering project, and the crazy thing is, guys, is it's partnered with Apple. Let me say that again. This project is partnered with Apple, and looks like it's a metaverse project. Like crazy stuff like this right here. Look at that, distributed GPU rendering on the blockchain. Like you don't need the server rooms. Like, you just have a little bit of computer power from everybody who is participating in the network, pool their computers together to go ahead and render the entire metaverse. Like, that is ridiculously smart. That is ridiculously smart. And like it's just revolutionary. And like a little bit of the partners, you know, we have the freaking artist Beeple on this project. We have the founder and CEO of the Brave software, you know, basic attention token. This guy created the the browser, and also he's the founder of the basic attention token, right? This guy also, like, he's just ridiculously smart. He also created JavaScript. Like, if that doesn't tell you anything, without this guy, there would be no Minecraft. There would be no Minecraft. Minecraft would be not a thing. It would not be a thing, because guess what? Minecraft is built on Java. He created the language for Minecraft to be a thing. You know, you got a bunch of big brains on this project, and just the fact that it's partnered with Apple and what it did soon after, like, Apple's keynote, yeah, it just like went parabolic. So I would definitely look into this. I'm currently like looking for an entry level around here. You know, these levels right here, $4.50, but this isn't a bad area to buy either. So highly recommend looking into this one. Super huge project. Only for the people that stuck around to watch this whole video, though. That's why I stick these in the end of the video. But who knows? I might sandwich it in next time for the people that, you know, just skip to the end. So I appreciate everybody that, you know, hopped on this session. You know, more to come. It's gonna be a little bit challenging doing the next segment for this you know, crypto episode, just because next week I'm going to be in Miami, and I'm going to be there for like 2 weeks. You know, I have a sales convention to go to, and also, you know, there's a crypto NFT holder meetup in Miami, so excited to go to that. But you know, I'm gonna be out there for a little bit, 2 weeks out of this month, so it's gonna be just the fact that I don't have my whole setup with me. So I'm currently thinking of ways to sort of, you know, get around those issues, and hopefully I'll have it all solved up by this Sunday, because that's when I head out. So again, appreciate y'all for, you know, tuning in. Huge shout out to Sam and Harris, you know, the editors and producers of this, the guys who are basically the brains behind this whole channel. You know, just showing some appreciation for you know, being able to be a part of this, and you know, contributing to the channel, having a sort of platform to, you know, just talk here to people who want to learn about crypto, and you know, whoever tunes in. So, you know, I really do appreciate that. Shout out to them, and shout out to you guys for actually tuning into these. So with that all being said, y'all have an amazing Friday, have an amazing weekend, and I'll see you on the next episode. Peace out.